Welcome to my YouTube channel. Welcome back to those of you who have watched all the 5 people that have ever watched one of my videos before. Welcome back. Thank you. Uh, if you're new here, I'm going to go ahead and apologize. Sorry. You'll understand if you keep watching, which hopefully you will. Um, if you like what you see here, please don't hesitate to subscribe. You know, I'm just trying to share some knowledge and do some real estate education here. Um, Today, we're going to talk about the cost of waiting. And we all know that interest rates have been shooting up. They're around 7% now. Um, while historically, that is still pretty low, um, it's a lot higher than it was when people were getting 2.5%. Dang it, forgot to put my phone on Do Not Disturb. Um, It's still not as high as it was in the 80s, though, when people were paying 18.5% for a mortgage increase. But we're all aware that mortgage rates have increased in the recent weeks. And that probably means you've got some questions about what this means for you if you're planning to buy a home, right? So let's look at what this means and stay a little bit better informed. So as mortgage rates go up, they impact your purchasing power by raising the cost of buying a home and thereby limiting how much you can comfortably afford, um, and and keep your monthly payment where you're comfortable with it, right? So let's assume you were going to buy a $400,000 house. Uh, I say that because the National Association of Realtors says the median home price in America is $389,500. It's probably not that where you live. Like, say, my market, the median home price is between 200 and $250,000. Okay, but let's say you're buying in that national median home price, $389,500. If you're trying to shop at that price point and keep your monthly payments between $2,500 and $2,600, your purchasing power can change as the mortgage rates go up. Um, so let's take, for example, if you had bought a home that was $400,000 and you bought it when the interest rates were at 6%, you were roughly going to pay $2,400 a month, roughly. Okay. Um, Now, if you waited until it hit 7%, then you're looking at about 2650, 2660, somewhere in there. So that's an increase of like $200 to $250 a month. If you waited until it got up to 7.5%, now you're looking at roughly $2,800. So that's a $400 per month increase in your house payment. And I don't know about you, but to me, that's a pretty huge jump in house payment. I mean, that can definitely affect the amount of home you can afford, right? So as your monthly payment goes up, then that decreases the amount of homes you can look for. So the rise in a mortgage rate really does decrease your purchasing power. And if you're wondering where rates could go from here, I want to bring you to what Realtor.com says. Okay. I'm going to read this quote verbatim. They say, quote, many home buyers likely winced upon hearing that the Federal Reserve again boosted its short-term interest rates by 3/4 of a percentage point, a move that's pushing mortgage rates through the roof, and the already high rates are just going to go higher. So if you're waiting for mortgage rates to drop, guys, you're gonna be waiting a long time. I'm sorry to tell you. The mortgage rate is one of the tools that the Federal Reserve is using to get inflation under control. Okay. And until we think they where they want it is like inflation around 2% per year, then mortgage rates are just going to keep going up. If you're considering renting while you wait all this out, remember that that's going to get more expensive too, right? Um, A senior economist and director of forecasting for the National Association of Realtors said this, and I quote, "There is no doubt that these higher rates hurting housing affordability. There is no doubt that these rates hurt housing affordability. We know that. Nevertheless, apart from borrowing costs, rents additionally rose at their highest pace in nearly 4 decades." I'm going to say that again. Rents additionally rose at their highest rates in nearly 4 decades. So basically, it costs more to buy a home this year than it did last year, but the same is true for renting. It means that whether either way, you're going to be paying more. The difference is if you pay more for a home, you're building your equity and you're building your net worth, as opposed to if you're renting a home, you're building somebody else's equity and net worth, if that makes any sense. So, the bottom line is your situation's unique. You got to make the best decision for you and your family. But keep in mind that interest rates are only going to go up, and that while you wait, it's going to be costing you more money. So, guys, don't wait. Interest rates are going to go up. You're going to pay more. And I hate that for you. But it's the reality of the situation we're in. So, anyway, I will jump on again later on this week, maybe even tomorrow. Who knows? And I hope to see you back. Guys, have a great day.